Hello and good morning, everyone. Welcome back to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. Signs of moderating inflation, as projected by the PCE numbers released on Friday, triggered a good rally for the risk assets, especially equities. PCE is a preferred inflation gauge, which rose 0.1% in May, and from a Y-on-Y basis, it rose 3.8%. For the current week, we have got a host of data that will be released, including lots of PMIs, Fed minutes, and of course the NFP. JK, good morning. I'm sure this will be a very busy week for you. How are you currently reading the rate expectations? And after Friday's cooling PCE, is there any expectation of another pause?
No, if we go by the market's discounting, there's still more than 80% probability of a 20 basis points hike. And in fact, some indications that even a 25 basis point hike in September is a 50-50 probability right now. So that said, the global risk sentiment has been really elevated in the last few weeks. In fact, during the first half of the year, many challenges were there, like rising inflation, higher interest rates, debt ceiling stalemate, and the slowdown in major economies, all of which, there were many signs, but markets have actually performed very well. For the year to date, the S&P 500 has topped 15.9% for its best performance since 2019, and Nasdaq's 31.7%, best since 1983. That is for the first half. So Dow, of course, had a modest gain of 3.8%. So softer than expected US data release, of course, on Friday did help matters further in carrying the rally. And importantly, the core inflation drop was much modest and still stays quite elevated compared to where the Fed would like it to be, and therefore that's not really a factor, and that doesn't change the rate hike prospects, because even Fed is not seeing any major slowdown in the economy. So that puts to rest any prospects of a pause, continued pause from US economy. Interest is, of course, on Australian Central Bank, which meets tomorrow, where the opinion is completely divided on whether they hike 0.25% again, or they once again go into a pause. On the bond yields, not much movement was seen. The rise which was seen after strong GDP data on the previous day has been broadly maintained, with only 10-year dropping a bit, but 2-year was still up 2 basis points. It was the UK yields that were up by more than 5 basis points for both 2 and 10-year tenor, as nothing seems to be in the way of Bank of England moving towards 6% policy rate. On the FX, the bigger moves have been only seen in CNY and Japanese yen. The PBOC, the People's Bank of China, has been fixing the daily yuan middle rate lower than what the market estimates based on other currencies movements, and also sporadic intervention by selling dollars, but seems to have had no major impact. The USD offshore yuan has been moving between 725 and 728, and markets really got the interest rate differential as its main theme for selling yuan against the dollar. And the yen, of course, is the same story, with the US economy doing well and the rates still expected to go higher. There's little reason for investors to sell the yen, particularly when there is no strong indications from the policymakers to either intervene or no. It's still on the realm of expectations above 145 that they will intervene, because historically that is where they intervene. Euro seems to be happy in a range, because long positions weigh on it on any uptick, but downside also looks limited. GBP is the best performance, basically on the basis of the higher interest rate expectations. Coming back to our own rupee, we just ended a month as well as a quarter in which the rupee has not only outperformed the other peers, but also moved in a much narrower range than previously. Month of June saw a high of 82.64 and a low of 81.84. Well, for the full quarter, it wasn't too wider compared to the monthly range, and it moved between 81.64 and 81.95. The feature of the quarter has been the significant flows from FIIs to the tune of 14.5 billion, compared to an outflow of $2 billion during the quarter. But at the same time, central bank actions have ensured that the rupee did not run away and did not make it incompetitive, or rather kept it competitive for our exports, which is facing challenges due to the global economies, which are showing a real slowdown. I don't see this scenario changing much. If anything, there can be a small squeeze because the market seems to be slightly positioned on the short side because of the continuous flow of the dollars. So maybe hoping that Reserve Bank will let the rupee to appreciate. But if they do not, and there can be some case for rupee to slightly weaken during the month. But that really a matter of speculation right now. But there has been an important. It is an important day for Indian financial market today, as the Singapore futures and options for Nifty shifts to our own GIFT City with the trading hours of 21 hours and available to investors who can even react to the global events later in the day. For FX traders, maybe this is one move towards a similar flexibility in hedging forex exposure in US and early Asian times. I think this should eventually happen in a very phased manner. Finally, we did have the external debt data on Friday, which increased to 5.6 billion from a year earlier, but overall debt to GDP ratio, or the external debt to GDP ratio, has actually been lower. Importantly, the share of short-term debt in total external debt increased to 20.6% from 19.7%. The ratio of short-term debt to foreign exchange reserves increased to 22.2%. That may be a slight concern because you will have outflows on account of this, which will be, unless, of course, the debts get rolled over. So the overall sense on the rupee is one of stability, along with other forex rates against the USD, which seems to be happy. Not buying dollars enough because the risk sentiment is positive, and flows. In fact, global inflows to the equities have been quite good. So I think this is, at least to start with in the quarter, it may be good. But as you said, lots of data coming up, and we can have some influence from those on the corrective side. Thank you.
Thank you, JK. And I think the broad theme was, of course, the global risk sentiment, which has been elevated. The S&P 500, which topped 15.9%, almost 16% on a year-to-date basis. And of course, the softer than expected PCE figures fueled some more of that risk rally. What's very interesting is the Australian Central Bank meeting tomorrow, where the opinion is divided on a rate hike versus a pause. Of course, the Australian Central Bank was one of the central banks which raised rates recently after a stint of rate pauses. So it will be interesting to see how that plays out. While rupee ended the quarter with outperforming some of its peers, as well as remaining in a tight range. That's it from us today. Tune in tomorrow for another round of fresh updates. Thank you so much for listening.